As the staff are coming to the table, we'll begin on the next item on our agenda, which is a recommendation from the Division of Trading and Markets. This recommendation, if we adopt it today, will put in place a new anti-fraud rule, specifically aimed at the abusive and manipulative practice called naked short selling. A half-century ago, securities trading required legions of messengers who scurried about Lower Manhattan with parcels filled with stock certificates and checks. And in those days, the New York Stock Exchange would have to close for part of each week to catch up with the paperwork. Today, paper's been largely replaced with electronic data, and that's a very good thing. It's allowed trading volume on the nation's securities exchanges to rise exponentially, and it's helped to drive down the cost of trading for individual investors to a small fraction of what they had to pay in the old days. But it's also given rise to new opportunities for fraud. In particular, today's elaborate system of electronic net settlement has enabled a particularly pernicious form of fraud called naked short selling. In a garden variety short sale, the operation of the market is a powerful discipline on the short seller because he or she can experience unlimited losses if the stock's price rises. But that potential for loss, and hence the discipline that the market exerts on short sellers, disappears if the short seller doesn't cover the sale as required. Legal short sellers have to borrow the shares that they sell. Illegal naked short sellers don't bother with that part. They sell shares of stock that they haven't borrowed and that they have no intention of borrowing. In some cases, they sell shares that don't even exist. Illegal naked short selling is an especially serious threat to smaller public companies whose relatively thin market capitalizations can be more easily manipulated. And in the same way, it threatens the savings and investments of many retail investors in these smaller companies. There are many legitimate reasons that a trade might fail to settle. But the extreme abuses that are reflected in securities being chronically listed on Reg Show's threshold security list for months and years at a time is ample evidence that there is also fraud in the market that needs to be arrested. Periodically, there are reports that following a legitimate purchase of 100% of the outstanding shares of a microcap company, millions of phantom shares continue to be traded by naked short sellers. Reg Show has done a good job of making the data surrounding these issues public and bringing the problems to the attention of companies and investors, as well as to the SEC and our fellow regulators. But identifying market manipulation isn't enough. Manipulating the price of a security is a serious fraud, and the SEC can investigate it and punish it. Reg Show needs teeth, and this recommendation is aimed at providing them. It shouldn't be enough that an illegal naked short seller can break the law a little bit, and then when he breaks it a lot, all that's required is that he has to cover the short, which the law and the seller's contract would have required in any event. That's particularly true since the manipulative activity in these cases is aimed at driving down a stock's price, which gives the naked short seller the opportunity to cover at an undeservedly low price. Reg Show has accomplished a good deal, but our experience has shown that Reg Show can't be effective without enforcement. The Commission's Office of Investor Education and Advocacy has received more than 400 investor complaints related to short selling of this kind in just the last year. The Commission continues to hear from business leaders and policymakers on this issue as well, because of the injury that this kind of fraud inflicts on investors, on companies, and on our economy. It's been 4 years since the Commission adopted Reg Show. Requiring that short sellers locate securities before selling them short and imposing order marking and closeout requirements was an important step forward, but it was not enough. We found, for example, that the grandfather exception to Reg Show created a significant gap in Reg Show's application. It accepted fails to deliver that occurred before Reg Show's effective date or before security was added to Reg Show's threshold list. And so last year, we closed that loophole. The Commission also voted last year to repropose an amendment to Reg Show that would narrow Reg Show's options market maker exception. The market maker exception applies to fails resulting from short sales made to hedge positions that were created before an underlying security was added to Reg Show's threshold list. In this regard, the Commission is currently considering more than 350 comment letters that we've received on the proposed changes to the options market maker exception. The Commission also is carefully analyzing data related to the impact that this exception has on investors and on the markets. At the same time, the Commission also is in the process of analyzing preliminary data to examine the impact of the elimination of the grandfather exception on the level of fails to deliver. While we're speaking of data in this area, I should point out that this past December, the Commission began publishing monthly aggregate fail to deliver data on our website at www.sec.gov. The Commission is updating this data quarterly. The availability of this information should help inform public debate on this important issue. Today's proposal to craft a specifically tailored anti-fraud rule to the abusive practice of illegal naked short selling is an important next step in the battle to end behavior that is corrosive both to the rule of law and the trust that market participants necessarily place in one another. Abusive naked short selling saps the confidence of investors and issuers who depend upon our markets to value securities in a fair, efficient, and orderly way. The report this type of abusive conduct is already receiving increasing scrutiny from our Division of Enforcement. Within the past year, the Commission has sued naked short sellers who were deliberately misrepresenting to broker-dealers that they obtained a legitimate locate source and that their orders were long. And we've charged sellers who misrepresented that their sales were long in order to circumvent the provisions of the Commission's Regulation M. Today's proposal would add to the Commission's enforcement arsenal a new anti-fraud rule, Rule 10b-21, squarely aimed at naked short selling. It would include within its ambit broker-dealers acting for their own accounts. A person will be found in violation of Rule 10b-21 if they do the following two things. First, deceive a purchaser, broker, dealer, or certain others about their intention or ability to deliver securities in time for settlement. And second, fail to deliver those securities by the settlement date. Among other things, proposed Rule 10b-21 would target naked short sellers who deceive their broker-dealers about their source of shares that may be borrowed for purposes of complying with Reg Show's locate requirement. The proposed rule would also apply to sellers who misrepresent to their broker-dealers that they own the shares being sold. Importantly, proposed Rule 10b-21 is firmly grounded in the Commission's anti-fraud authority under Section 10b of the Exchange Act. That means that a finding of scienter will be required to establish a violation under the rule. That's an important element to note because legitimate short selling offers our markets many benefits in the way of facilitating liquidity, managing risk, and promoting pricing efficiency. Today's proposal is in no way intended to discourage any of that very healthy market activity. The Commission intends this proposed rule change to provide further detail on the Commission's views regarding the types of abusive conduct in this area that constitutes fraud. Proposed Rule 10b-21 also would help to streamline the Commission's prosecution of these kinds of abuses. Additionally, this rule would underscore for market participants in this area the continuing importance of having policies and procedures in place to protect themselves and the markets from the irreparable damage that can be caused by fraudsters operating in this area. Finally, this rule proposal will put market participants on notice that the Commission's Division of Enforcement will remain vigilant in stamping out abuses in this area. And as is the case with all egregious violations of the federal securities laws, the Commission will be prepared to make criminal referrals in this area where appropriate.